Morning, everybody. It's July 25th, 2022. My name's pianomattyb. That is Scaramucci's. This is your morning TA. A brief glimpse into the crypto markets, where the sun's shining, where the wind's blowing. All the humble opinion of this piano. Zamboni, bringing the data. FOMO index has remained at 30, frozen in a state of fear. Bitcoin dominance is at 41.6%. 24-hour volume is 66 billion. Heartbreakingly low. The overall market cap is 1.01 trillion. Give or take 100 million. Yeah. F major over C, classic Elton John chord. A chord that wants to go somewhere. It cries for change. You're putting on your shoes, it's out the door. You're walking to the car, it's pulling out the driveway. Slow down, F major over C. If you don't stop and appreciate where you are now, you'll never get to where you think you want to go. A future being chased never gets caught. It only outruns you forever. Well, we talked about this, so it should have come as no surprise to anyone in this boutique community sharing a once-in-a-lifetime journey together. When Bitcoin price action took a dive, at that point I'd be eyeing up the neckline, about 21.7, so let's keep our eye on 21.7. And heavens to Murgatroyd, she didn't do just that. After a last heartbreakingly optimistic gust up, we peaked out at 23.7 and continued down, finding a temporary bottom, 21.9, hitched a ride with a 50 moving average back up to 23K, before giving the 50 the backdoor splits of Ruskies and falling down to 21.7. That level we said to keep our eyes on. We've since bounced a tad to a time of production 22K. Now this puts us at a contradiction of patterns, as the 21.7 level is that level at the head and shoulders pattern was to break down. However, its crude fandangling down has also carved out a falling wedge, which could also attach itself to a bull flag, both of which are bullish patterns. If we can get to 22.5, that could be a breakout point out of this wedge. And if, and I say if that happens, I'll be looking to get above 23K in order to consider it a legit breakout. But if, and I say if, we can't get above 23K, we'll likely scooch back down this trend line, ultimately breaking down and having an uncomfortable talk about attitude and performance at that 21.7 level. Now, one giant caveat with all technicals is this SHIT storm of fundamentals coming out this week. Between the dinosaurs at the Fed doing rounds of adrenochrome shooters deciding how high to hike the interest rates, and the tech giants' earnings coming out, she's going to be a rocky one. So take all technicals with a grain of speculative salt. I'll close this noisy little so-and-so with some high and low levels of reckoning, down at 20.5 eGads and up at 24.5. That's how wildly rocky this week could get. Now over on the Ding Dong, aka the Daily Chart, we can see our cute little bull flag is still humming along, lending a bullish hand up with strong support down at that 21.5 level. Small annoying case of hidden bearish divergence, with price action making lower highs and the MACD making higher highs. We can stuff that into the bearish stocking. And over on the Wookie, aka the weekly chart, we just missed that historic bullish event, closing the candle above the 200 moving average by about $200. So we're back underneath her, for now anyways. And I'm just gonna leave this hypothetical bear flag of epic proportions on the table and walk away backwards real slowly out of the room. I'm not emotionally ready to go over its price probabilities right now. But if you go to your weekly charts and map this one out, you'll see where she goes. Throw your price probability on this bear flag in the comment section, and I'll be checking your homework later. And remember, we're playing the same game as our psychopathic elected lead. That's right, it's the long game. So zoom out and have a fantastic day. And sing it with me now. Or on the banks of boom dash bang, Bitcoin, crypto, morning tea. Hey, whoa, ching. Make sure you like and subscribe.